Hi guys, it's your host Ted. Let's get this fucking party started. Now, today we're going to be talking about another concept about that's data handling for quantitative finance. It's a beginner video, right? What we will learn is right here vocabulary, the data sources. It's not 20 actually. I added 45 data sources for everything that you could actually need, and then cleaning steps, data handling, adjusting, resampling, return, survivorship bias, every single thing. Now, phase zero, that's your vocabulary and mental model. Now let's talk about it. What do we mean by that? Now, bar, what is a bar? It's a summary of price activity. It's a time series data, right? 1 minute, 1 day, 1 hour, 4 hour. Then you go to your OHLCV. That's your open, high, low, close. It's also L1 data. That's level one. Now, then you got your tick. A tick is basically a single trade or a single quote update. That's the rawest form of data. Then your trade and execution timestamp, price, size, side, right? Then you got your adjusted close price corrected for splits and dividends, total return, very easy. Split, what do you mean by split? So basically, if some companies announce 4 for 1, so it's basically like you will now have four stocks. If you already had one stock of that company, that's like Apple announced 4 for 1. Then you got your dividends, that's cash paid per share. And then you got your corporate action, anything that changes share count or class. Survivorship bias, let's talk about it again. So survivorship bias is like focusing on the companies and assets that survive the test of time, and not including the ones that crash like Lehman Brother and Micron, right? A lot of them, right? Now, calendar, it's very easy. Front month, nearest expiry futures contract. Continuous contract is a synthetic series that's created using stitching for front month futures together. Then you got your roll, bid, ask, mid. Bid is your lowest sell quote, highest buy quote, and average. Spread is the difference between a buy and buy and sell, or you can say ask or bid. Basically, let's say you got your buy at 100.1 and you got your bid at 100.2, so you got a spread of 0.1. It's also calculated in pips, points, a lot of ways. A stale price is a price that didn't update because there was nothing traded, there was no trading volume. Now, how does a data handling pipeline actually look like? It's your source API. You create a script, you create an API that fetches your raw data, and then it cleans the NAN and outlier values, and then it adjusts for splits, dividends. Then it resamples into the time period you are actually trying to model, and then you can do feature engineering. Now, this is the code for setup. Then let's talk about different types of data, that's L1, L2, and L3. So it's basically like each of those levels just signify how deep into the order book the data actually shows. The deeper the level, the more the information, and usually the more it costs, the harder it is to handle. Now, what is an order book? Basically, every exchange maintains an order book per instrument, a sorted list of buying orders and sell orders. Each entry has a price, it has a size, it has a sometimes it has an order ID. L1 usually doesn't have an order ID, but L2 sometimes do, and L3 almost always does. Trade happens when a new order crosses the book, buys above, at, or sells at or below the best bid. Then we got our L1, that's top of the book, that's just basically the best bid and best ask. What is L1? Again, guys, this is a tip for you. I know a lot of you guys are trying to model, not a lot of you, I mean a few of you are trying to model L2 data. I will tell you, L1 data is almost free. First of all, readily available, easy to sample, easy to feature in, easy to make a model on, and easy to trade, and even easy to get a live feed of. If you're trying to model L2 data, let's say, first of all you have to buy it. Then let's say if you did buy it, you will, to run that model, you will need a live feed of L2 data, which is again you have to pay for that, right? So why not being a retail quant? Even if you're trying for quant firms, that's or some research study, that's separate, that's okay, then you can use L2, L3. But if you're trying to just beat buy and hold, why even use L2 and L3? Just get that shit out of your mind. You don't have the infrastructural capabilities of a HFT firm or a quant firm, right? Neither the background or the, let's say, education for it, right? Now, L2 is your aggregated depth. What do you mean by aggregated depth? It's like the full order book aggregated by price level for every price within some range of the mid. The total size rests there. Basically, you can see the shape of supply and demand around that specific touch, right? L2 typically arrives in snapshots and incremental updates. Each update includes side, price, new total size. Replay the updates to keep your local book in sync with the exchange. Use cases market making, short horizon prediction, basically your micro price, order flow imbalance, TCA, execution algos that respect the queue depth. Sources, we're going to talk about sources later as well, but for L2 you got your CME, MDP, Nasdaq, Polygon, Data Bento, Algoseek, Kaiko, Binance, Coinbase, WebSocket, with different depth streams free for crypto. Then you got to watch out. L2 throws millions of message per day on a busy signal. Storage can be a issue, right? Then you got L3 data, order by order, the rawest form of data. Every individual resting order is visible, even if it was just inserted, modified, cancelled, or filled. Regardless if a trade was punched in, cancelled, no, it doesn't matter. Everything will be recorded in nanoseconds, timestamp to nanoseconds. That's right. And you can reconstruct a queue position using this. Basically, how many orders are placed ahead of mine, study individual retail participant behavior, microstructural features. It's used for HFTs, queue aware market making, latency arbitrage, research, academic work. The sources are Nasdaq, NYSE, OpenBook, BATSPitch, CME, MDP 3.0. Crypto, you got your Coinbase, IDPI, Kraken, Lobster for academic. But L3 is everything in L3 is paid, right? In the comparison, you got your best bid ask in L1, L2, L3, full visible depth in L2 and L3, individual orders in only L3, queue position partial in L2 and fully in L3. A single day stock data, one single stock data L3 can only take you like KBs of your space. L2 might take MB, but L3 will take GBs of your storage. Then thousands, millions, tens of million. L1 is usually mostly free. You just have to, look for sources. I will tell you in later of the video. L2 is sometimes free, very rarely free, right? And L3 is never free. Trust me. Then L1 is used for OHLCV strategies, ML on bars, execution, market making, sorry, HFT, Q aware, MM, and microstructure. So if you are building a daily or even a 1 minute strategy, L1 is enough. Stop that influencers preaching L2 and L3 data, that order book data. That's not for you guys right now. Now don't pay for L2, you can't use if you are researching execution. L2 is minimum, but again, still depends if you're going on tick data and tick modeling. That's when it's required. If you want to study individual order behavior, use agentic based modeling. L3 expensive but useful. Tick data is not equal to level data. Tick data is basically every executed trade. It's a subset of L1, whereas the level data is the aggregate of all the ticks in a single time frame. Right? Now, bottom line is most of the rest of this notebook works on L1, which you should focus. Daily and intraday, we mentioned L2 and L3 sources in phase one, but you should not feel the pressure to use them until you have a strategy that actually needs that much depth. Now, let's talk about the data sources. The free, easy tiers. Yahoo Finance, it covers equities, ETFs, indices, FX, crypto, futures, options. Uh, you will get like good daily data and some intraday data. Adjusted prices are also included. Then you got your Stoop. You will get global equities, indices, FX, commodities for free. Great, especially for non-US tickers. Daily only, returns descending date sorted. Then your Google Finance, Trading View, Export, most asset classes free. quick eyeball charts, export CSV from trading for backtest. Then you got your Fred API for macro rates, FX, commodities, GDP, CPI, right? Basically, your red folder news. It's the gold standard for US global macro. You will get a free API key. Then you got your US Treasury. That's for US Treasury yields, options. You use it for daily yield curve direct from home.treasury.gov. ECB statistical data warehouse for euro rates, ECB FX reference, daily CSV. There is no key required. Bank for international statement, cross country rates, FX, banking, real estate. It's slow but authoritative and reliable. Then you got your World Bank or OECD. You will get GDP, demographics, and leading indicators. You got a long history but slow frequency. Then you got your coin gecko, crypto prices, market cap, on chain stats. It's free, light limit, 10,000 plus coins daily and minute data available. Then you got Coinbase, Binance, Kraken. You will get crypto spot and perpetual L1, L2 for free, partially L3 as well. The exchange itself will give you the order book streams. Then you got your CME group settlement files, again future specs, daily settlement term structure. Then you CBOE, it's like VIX family put call ratios option stats. Then SEC Edgar, that's your equity fundamentals filings. You know, some people do use filings as well in models. Now these are your commercial providers, like which you have to pay. It's like Alpha Vantage is freemium, but I mean it's good actually, no doubt. Alpha Vantage, I also have a key for that. Equities, FX, crypto is there, fundamental indicators, more structured around US, right? Intraday is available, technical indicator endpoints, reliable data. Then Polygon US equities L1 and L2 option, FX, crypto future. Cost, it's costly. Alpaca is there, US equity, crypto with brokerage. It will help you with free historical plus paper trading. Paid tiers are there. And then you got your data bento. Data bento is good for US equity future L1, L2, L3 options, FX. It's like pay as you go. And pro tip, if you make a new ID in data bento, you get $125 of free credits, and those are more than enough for your one model. You can get enough data with that. Then you got your Tingo for US equities, crypto news, IEX Cloud for US equities, Quandl or Nasdaq Data Link, that's for macro, fundamental, future continuous fundamentals, Refintic data stream, econ, everything, equities, FX rate, commodities, fundamental, enterprise. It's very expensive actually. Then your Bloomberg, extremely expensive. Again, FactSet, equities data, alternative data. So the CRSP, US equities, Norgate data is there, Kaiko and crypto compare. Basically, it will get you crypto across 100 plus exchanges, paid data, algo CQS equities, option future intraday, and tick data. Then we talk about our, just a second. Yep, 30 minutes in. We talk about our CFDs, that are retail broker data sources. We got our Oanda. It's free with a demo account. Excellent intraday history for practice with a practice key. It gives you FX, CFD, FX plus CFD on indices, metals, bonds. MT5, you basically, if you make account with any broker and you just install MT5 on your laptop or PC, you connected with that and you can fetch data and you can export it into your laptop using with a CSV file. Then you got your IG Group Labs, Sexo Bank, Open API, C Trader, again free, almost free or freemium, right? Interactive brokers, it's like subscription per market data feed, is the most reliable option if you are an easiest Python wrapper in terms of CFD brokers. Then you got your FXCM, Forex Connect, Ducoscopy, and it's like free, but you have to manually download it. Then you got your future specific sources, CME data mine, ICE data services, Eurex, T7 enhanced order book, Norgate futures, Quandl, Grace, Quandl, continuous future, Data Bento, Polygon futures, ADVN bar chart, right? This is the decision tree for which data, what are your requirements and what are the good sources for that data. Then how to set up and use API keys, pip install, you have to do Fi Finance, Panda, Data Reader, Fred API, Alpha Vantage request, or you can do Alpaca PY, Polygon API client, Data Bento. You can just put your API keys or API secret in here, and it's like done. I've given you this as well. Just input and go, enjoy. Right now, this is for data bento, right? Yep. Now, what is the difference between a adjusted price and a non-adjusted price? So as you can see, this is a back adjusted price, right? It's like true to true to history, right? But a non-adjusted price, let's say we had splits 4 for 1. If a stock was trading at 100, it will now crash to 25. So it will create a phantom drop, right, in market share prices. But there was actually not a drop. There was a like a split, right? And in this it increased, so this created a false positive. Your model will actually see that this as like crazy profits, and you'll be like, I did something, but you didn't do something. You just used non-adjusted data, which you have to adjust. Now this is your equities phase 2. SPY data, adjusted close. Always download adjusted close, or make it adjusted. Then this is your multi-ticker download, normalized to 1 for at the start. Then you got your crypto, CoinGecko, Binance, as you can see right here. This is like Yahoo Finance though. I did not include my API keys to so that I don't get hacked. Then we get our FX, ECB, Alpha Vantage for Forex, and that's rates and bonds, Fred, US Treasury, as you can see right here, 3 month, 2 year, 5 year, 10 year, 30 year Treasury yield bonds. Spread is the recession indicators, right? Then you got your phase 6 commodities and futures. Yahoo Finance uses CL is equal to F for crude, GC is equal to F for gold, right? And you have your data sources for this, as you can see right here. And this crash is it's actually it was actually there. Crude did go negative in 2020. If you want to check it out, it was a crazy thing. Now it's your phase 7 macro, Fred and World Bank, unemployment rate, CPI rate, GDP growth, right? Then you got your option using Yahoo Finance Chain and others. This is your IV Smile. And then we get alternative and web data like news headlines, sentiment, web traffic, satellite imagery, credit card aggregate, app store rankings. So, three rules for alternative data ethics and legality. Always check the sites robots.txt and term and service. Rate limit aggressively. One request per second is kind of default, or you will get IP block. Cache locally. Many MNPI proprietary data lawsuits start. We kept hammering their endpoint. Then you got your cleaning the missing values data. Real data has holes. It has market holidays, API errors, rate limit drop, your net might have stopped working, newly listed tickers, halts, time zone mismanagement. So the strategy is to handle that safely. Its method is drop rows, forward fill. Now, why do we use drop rows? If you must align tickers and missing value means, and missing means missing. So the risk is loses data. Then your forward fill. Prices when the asset didn't trade, last known price still applies. It's a stale price bias, right? There was no zero volume. Linear interpolation, smooth series like rates, hides actual gap, and fill with zero returns when no trade return is genuinely zero, wrong if drop existed. Re-index to calendar, then fill, make every business day exists. It will create fake bars though, right? As you can see, linear interpolation, raw, gaps, and F fill, forward fill, and drop, right? Usually F fill or drop is used. Sometimes linear interpolation is used. Then you got your cleaning step 2. That's your outliers, bad ticks, basically your fat finger trades, risk matrix. Always inspect returns before trusting them. If your Z score flag is above 6 on a rolling window, it's your common detection rules. Robust MAD flag value more than 6 into MAD from the rolling median. Two common fixes: win rosary, cap at a percentile, 1 percentile, or 99, right? Drop the bar if it's a clearly print error. Simple outlier detection, right? You can drop it. Then you got your cleaning step 3 for duplicates and calendar mismanagement. So duplicate timestamps or duplicate rows are a silent killer. They double count the days. Many API returns them at month year boundaries, and you can just drop them. And as you can see the code for here, after cleaning, three duplicate index labels were deleted. Then you got your adjusting for splits and dividends. Why adjust for close and not raw price? Why Apple did when Apple did 4-1 split in 2020, on the morning of the split, the share price went from 500 to $125. Without adjustment, your strategy would have seen a 75% gap down and a phantom crash, and probably a trigger a stop loss for no reason or create huge drawdowns. Adjustment rewrites all historical prices so that returns calculated from the adjusted price is adjusted series match the actual cash on cash return an investor would have actually expected in like life, right? Now, two kinds of adjustments: split only and total returns. Split only, so basically only divides by the split factors. Total return also reinvest dividends. Use this for backtesting actually. A lot of your data providers also will provide you adjusted prices. The math for split factor is right here for dividend to convention Yahoo total return index. Then let's talk about currency and FX adjustment. If you trade shop.to, Shopify, or Toronto in CAD, but your report PNL is in USD, you must convert at each bar at the FX rate. As you can see right here, there is a small spread difference, or you can say FX exchange rate difference in CAD and USD. Then we come on to resampling and frequency conversion. So going from daily to weekly is not taking every fifth row. You aggregate the data OHLCV correctly. Open is your first, high is your aggregation is max, low is your minimum, close is your last, and volume is equal to sum. Right? As you can see right here, daily bars are gray lines, and then you got a weekly that are closely related to that, and the monthly one you can see are clear, smooth and down lines. Then we have our returns, simple log excess. Simple returns are used for portfolio aggregation ratios. Logarithmic returns are most commonly used for time aggregation statistics. Excess returns are used for Sharpe, alpha, and CAPM calculation. Then you got your total return that includes dividends. That's your real PNL. Then we have survivorship bias and point in time fundamental requirement. Now, what is a survivorship bias? If you backtest the S&P 500 using today's members, you are studying companies that actually survived the crashes. The dozens that went bankrupt or were required are missing. Result: every result is too rosy. Yeah, so your defense is use point in time index membership using CSRP, Norgate, or Sharadar, or basically you can even look at Google and or Wikipedia, or use some LLM to actually create the list of the stocks that were merged, delisted, and you can add them till that point of time. That will also create a point in time data. Or test a fixed universe defined at the start of the period, never the current one. Now, point in time fundamentals. Fundamentals plus technical is equal to quantamental. It's also used in a lot of strategies. We will be making some strategies that are quantamental as well. So, today's earning number for Apple's Q1 2010 has been revised many times. So, using today's number to make a 2010 trade is a look ahead bias. Vintage data records what was knowable on each historical date. For this, you can use Alfred, that's like Fred's vintage archives, rather SF1, CompuStat with pit flag, definitive data stream pit, right? The one today only universe that's biased, full historical universe, this is the honest one. These are the honest realities, right? Now, storage and caching. Re-downloading data on every notebook is slow and disrespectful. The source is free tier. Cache locally. How you do that? Using CSV files. The pros are human readable, universal. Con, it's big, slow, and no D types. Personally, I do use mostly Parquet files. It's fast, compressed, D types preserved. Con is only its binary. HDF5, multiple tables in one file, annoyingly versioning. SQLite, rail queries and dices. It's like more setup time. Then you got your Feather, fast pandas, no compression by default. Default for casual quant research is Parquet file. But even CSV files is good if you are not trying to download L2 or L3 data. Then we have a reusable data loader code for you. This is the kind of helper, and this is the code that you want to keep around forever. Thank me later. Now, this is SPY clean adjusted via load clean, daily return winterized, and outlier filtered. Now, let's talk about the pitfalls and glossary. The pitfalls that quietly break backtests is forgetting auto adjust is equal to true. This strategy sells on dividend expiry dates and execution dates and shows fake gains. Mixing time zone, combining a US close series with a London close series at the same data label, using today's index membership for a historical ship, historical study that's survivorship bias, forward filling returns instead of prices, fabricates trade, reindexing without FL leaves NAN holes that propagate through indicators, trusting a single source. No, you should always aggregate data. Then storing data as float 32 silently, and then hard coding paths, re-downloading data on each cell. You will get banned for sure, or you will have great bills for data collection. And then ignoring the calendar of the target market. Tokyo is closed when New York is open. It's simple. OHLC conflicts after resample, float precision on tiny volume, and then as a feature, time zone naive data. Then this is your glossary and suggested next step. You can replicate, you can build a multi-source loader as well. So try our finance, fall back to stock if a ticker is missing, add vintage aware macro loader using Fred's Alfred endpoint. Then there are further studies for this. We will be covering this Marcos Lopez advances in the next video. That's your basics of ML. You now have a mental model full of data pipeline, source, fetch, clean, adjust, resample feature, a reference card, working code to download equities, all datas, three simple cleaning recipes, the maths, visuals or split, a reusable load clean, and a pathway based local cache, a 15 item pitfall list, and a complete groceries. Strategies fail and can be improved, can be changed. Data discipline is very necessary, right? Thank you so much, guys, for listening to me today, and I hope it was worth your time. And I hope I'm adding value. I'm open to your suggestion if you have any. Uh, Thank you so much for your time. Bye bye.